Hi, this is Andy Filippiak in Toronto for the week of June the 6th. Well, there's no doubt that the higher inflation numbers we're seeing globally, along with the supply chain tightness, is dramatically slowing the global economy. Earlier this week, we had the World Bank come out and lower global growth numbers for this year, and it's really not surprising. I've included a chart with this video, which many people won't see because it's not reported on and it's very difficult in many instances to explain. But what the chart I've included with shows is that currently banks are not lending to banks on an overnight basis. The Fed funds rate is technically the rate that banks lend to one another on an overnight basis. For example, when banks have excess deposits that they don't want to lend out, they will often lend it to other banks on an overnight basis to earn a small rate of return on those excess funds. Conversely, when a bank needs deposits, it will borrow these deposits and use them against the loans that they've created. However, currently, banks are afraid to lend to other banks, and this is where the reverse repo situation comes in. Currently, and this started a little over a year ago, the U.S. Federal Reserve is now providing $2 trillion on a nightly basis to banks that need deposits to balance their books. In essence, when a bank can't get overnight money, they will pledge assets to the Federal Reserve. The Federal Reserve will hold those assets, create cash, and provide it to the bank in return with a small haircut. So on the chart that I've included, you can see that $2 trillion is now being lent on an overnight basis. So in effect, while the Fed is tightening credit, it's still being very easy because the banking system basically needs it. So banks are afraid of lending to other banks in case they don't get the money back because the bank goes into receivership. So this is a very, very important chart, and I think it reflects what Jamie Dimon said last week, the CEO of JP Morgan, that there is a potential economic storm on the horizon. And as we know, banks are the major way that money gets into the financial system. And if banks are afraid to lend to each other, and they're afraid to lend to their clients, this will only exacerbate the economic slowdown that we are currently in. Thanks for watching.